Welcome everyone to another video on Santiment's data and charts as we go over some of the happenings that have been going on between Christmas and what has been a tumultuous New Year these first 3 or so days. I'm recording the evening of January 3rd here on the West Coast in the United States, and we've already seen a more than year and a half high as Bitcoin got all the way up to 45.8K. And then less than 24 hours ago, it dropped all the way down to 42.2K. This may not sound like a lot, and many of you have been through bigger swings in crypto, but just in the span of the last 48 hours, we have started to see some increased volatility that has not been seen in quite a while, really. It's been mostly just up, up, up since mid-October when this bull rally really kicked started. And many theorize that it's only going to continue when ETFs, assuming they're still going to be approved, get approved, and we move to the next stage of Bitcoin, kind of moving into mainstream trading with much more accessibility for those novice traders who perhaps have never been on a crypto exchange, maybe intentionally, maybe they've been waiting for a much more safe way to invest in crypto without actually owning crypto. This is all, very exciting for the crypto community to know that the ETFs are very likely, not confirmed, but very likely right around the corner. And then, of course, we've got the halving coming up in, I want to say June of this year. I could be wrong. It might be May. Either way, we're about 4 to 6 months away from the Bitcoin halving happen. And for those who believe in the market cycles, obviously, every 4 years on the year of the halving has been quite a bullish type of atmosphere for crypto. And if you believe in those patterns, certainly this could be no different in a very profitable year to get into crypto. 2023 certainly was, and it's followed the 4 year cycle as well, as 2019, 2015, and 2011 were very good years for crypto. So that said, we're just going to do a quick dive on this video, looking at some of Santiment's on-chain and a little social data to look at where markets are likely to go next based on what's been happening. Now, I've gone ahead and refreshed all of our data so that you can see the real-time holdings of Bitcoin, Tether, and USD coin, sharks and whales. And we can see that it has been more shedding of coins over these past couple weeks than accumulation. The combined holdings of BTC wallets that have anywhere between 10 to 10,000 BTC, a very wide range, which holds about 2/3 of the entire supply. They did go from back on December 6th, holding 66.86% of the supply, down to where they are now at 66.52%. May not sound like much, but you see this darker green line here that shows 13.07 million was held, and now it's at about 13.02 to 13.03, somewhere between 40 to 50K Bitcoin in total has been shed from these wallets collectively over the past 4 weeks. So that's still a bit of a concerning sign, right? You can see that they, especially this dark green line, they did manage to continue to accumulate during this bull rally up until the first week of December, and then it started to flatten out. Yes, we got this what is it, 20 to 21 month high right here on January 1st, but then it did have that big drop, as I mentioned. And then the natural question is, maybe they're holding more stable coins. And unfortunately, when we look at the same equivalent tiers, looking at about $100,000 to $10 million Tether wallets, they've also been dropping a little bit. So that's a concern to us as well. It certainly doesn't mean the bull rally's over, but generally speaking, in most bull cycles, you see the Tether line as well as the USD coin, which I didn't mention, but it's looking the exact same as Tether. These lines in a bull cycle are normally moving up during bull rallies, not down. And this is telling us that Bitcoin and stable coins have actually been leaving these big key stakeholders' wallets. And usually we need their momentum and their constant pushing up of the price in order to keep the rallies going for the smaller traders out there. So, bit of a concern there. If we move down here, somewhat of a similar chart. This looks at the actual supply and exchanges. So down here we see Bitcoin supply and exchanges, and it's certainly moving in the right direction once again. It's down to 5.39% of uh, the total supply sitting on exchanges, which theoretically is a good thing because that means less coins can be sold off at any given moment and subsequently push down the price. Back here, you could see that there was a lot more supply on exchanges, and it just really didn't make a difference. The price was still climbing, but as of now, we're seeing that it's still very, very calm, and there's not a lot of Bitcoin rushing to exchanges. The only time that it was really a concern was this upswing between December 4th and 14th, arguably all the way up to the 21st, and that was the local top, but it eventually dipped down just a tiny bit, as represented by these dark green bars, and then jumped back up to that aforementioned 20-ish to 21-month high that we saw here. So the supply and exchanges is looking great for Bitcoin, and on top of that, the supply and exchanges for Tether and USD coin are looking quite strong as well because we want to see stable coins going up in terms of supply and exchanges. More stable coins equals more buying power. Now, this is basically a look at all of the coins, not just the coins held by those sharks and whales. So this is just the collection of, tiny traders, large traders, mid traders, everything in between. So take it with a grain of salt that the conditions for supply and exchanges look good overall, but the conditions for how much the sharks and whales are interested in holding these key assets is not looking quite so solid. Also worth mentioning, Bitcoin's social dominance has really picked up. Obviously, it really peaked on January 1st because that's when it got up to 45.8K, breaking its highest price barrier since April of 2022. And now it's starting to drop back down, but still, I like this 20% line as a good signifier that anything above indicates we are in a good condition and more people are talking about the top market cap coin in the world that allows all other assets to thrive. When it gets low, it's a sign of greed. And you can see, I mean, this is kind of too zoomed in, but if I just go to 12 hours here, look at how people really started talking about altcoins here and the price did local top. And sometimes it can actually happen when there's too much Bitcoin talk, believe it or not. There's kind of an extreme um, circumstance on either end of the spectrum that you want to avoid. So, too much Bitcoin talk when social dominance is just overwhelmingly showing high numbers for BTC, or not enough BTC talk as everyone's talking about meme coins and speculative assets that don't contribute as much to the overall market cap growth of the crypto sector. These are the conditions to look out for. And we did see that big spike on January 1st and 2nd, and that's when prices did collapse. Now it's rebounding a little bit, but we're going to have to see exactly whether there's going to be more extremes and, of course, more shark and whale accumulation. And the last thing I want to mention would be the funding rate. This is essentially the perpetual contract funding rate, indicating whether there is a skew toward too many longs, meaning that longs are paying shorts in order to open up those margin and leverage trades out there, or the opposite, and shorts are overwhelming and they are paying longs in order to open margin shorts on the uh, expectation of prices moving down. So right now, we've actually seen a lot of longs move up right at the turn of the year, especially post Christmas. That's when it really started to get active. It peaked here on January 2nd, and then boom, this has been the most long that we've seen this ratio over the past 3 months, and immediately prices did drop back down. So that is pretty indicative of how this metric works and why it's so powerful. Um, on the other end of the spectrum, look at all these shorts that were happening throughout October leading up to the big charge starting in the middle end of October. And rinse and repeat. Things get too long, prices move down, people give up on those longs, and then prices can move the way they want to move. This was kind of a weird exception. Extreme shorts going on. I think people were overreacting to ETF news and Elizabeth Warren and the US putting restrictions on crypto, which are still a concern, by the way. Um, so it was really volatile right here. Prices have eventually dropped, but it's just been a lot of longing ever since. And this is not ideal. You want to see um, calm, not really too many speculative leverage longs opening up, or even, these shorts are great because if they're liquidated, it leads to rocket fuel for prices to move up faster than they normally would have. So, um, long story short, after this big long uh, ratio uh, ended up getting burned and a lot of liquidations happened because of the price drop right after, we've actually got back to neutral for now. I wouldn't be surprised if we see a bit more of a bounce, people start to immediately long again and say, okay, the coast is clear. Or maybe people start to get a little more fearful this time and think we might be heading out under 40K. So crowd behavior is going to be extremely important, both on the funding rate side and on that social dominance side, like the last chart I showed you. Pay attention to those, as well as the supply and exchanges of Bitcoin, Tether, and USD coin. And of course, how much Bitcoin, Tether, and USD coin are being held by those big sharks and whales that really control the markets and decide when it's time to go up further or time for a correction. Hope this was helpful, guys. I will chat with you soon, and stay tuned for our Friday This Week in Crypto live stream, where I can't wait to talk all about the markets in further detail. Take care.